So what our criteria is not, and in our analyst meeting, there was a term thrown around that I actually thought was very clever. We called it alligator jaws or crocodile jaws. And what this means is when the price is going up while fundamentals are decelerating. The fundamentals are going down, the price is going up. The reason why I particularly like the idea of using this animal is because that jaw is very long. This could go on for a long time, where the two are not in line. And then, of course, as you know, crocodiles and alligators, they snap shut pretty quickly. And so what we don't want to participate in, and you will see us be very disciplined and letting go of companies that start to create this crocodile jaw, is that the fundamentals are decelerating and the price is increasing. This is a very dangerous setup because you get complacent and you start to think, you know, this stock that I'm enamored by, I love the story, I love the management team, I love the product, whatever it is, can overcome fundamentals no matter what. And that's not actually true. What happens is that eventually the market wakes up and says, whoa, what are we doing? Snaps shut, and you start to see those 30%, 40% drawdowns in one day. And there has been a consistent pattern that it's when the fundamentals are decelerating and when investors ignore that and the price continues to march onward, eventually the market gets really efficient and it starts to price it appropriately. And that's what we are not interested in doing. So we've had to step aside from companies where that's occurring. And the reason is that it might do okay in a bull market, but it won't do okay in any kind of correction. And I am not interested in setting up a portfolio where the stocks don't have what it takes to get through corrections. And it really goes back to that criteria that, again, we set forth that criteria very plainly in a lot of our analysis, that the stocks had to have this particular bottom line strength. We actually started talking about it in May of 2022 around cloud. And it was very, very clear over time. We were describing to our members that we would no longer participate in decelerating fundamentals. And so again, that strategy was put into place before we even knew what kind of 2023 we would get. What 2023 says to us in hindsight now is the market agrees. Why would you have a decelerating bottom line, decelerating fundamentals, and bank on that stock right now? Of course, because of the nature of ETFs and indexes and things, a lot of stocks will move when the NASDAQ moves. But who's the true leadership? It's a very narrow leadership, and it's not those in this crocodile jaw situation where things are decelerating under the hood, although the market is pushing the price up.